Good afternoon, everybody, and thank you very much for joining us at this webinar this afternoon. My name is Gary Wright, and I'm the Head of Research at Finextra, and this event is hosted by ACI and moderated by myself. We have a number of speakers who I will introduce you to in a moment, but as I say, thank you very much for taking your time this afternoon to join us on what is a very topical subject. Real-time payments is something that's happening across the globe, but today we're focusing on real-time payments in the US. The global state of play, lessons learned from past experience in other parts of the globe, and how to make money, how to commercialize and make revenue from the introduction of instant and real-time payments. And we're going to be debating a number of topics linked to that subject. And for all of you who have kindly registered, you do have the opportunity to participate by posting questions, offering comments, and we're going to try and draw on all of those as we go through the webinar this afternoon. And indeed, there are a couple of white papers and interesting documents you might wish to look at and indeed download during the course of the session. One is entitled How to Get More from Real-Time Payments. And the second, which I suggest you should have a look at and encourage you to download, is Delivering on the Digital Transformation, two very interlinked topics. The format for this session is that we're going to ask each of the speakers to give some introductory remarks, some initial thoughts and subjects, issues on the subject from their perspective for the organizations they represent. And then following that, we're going to go into a slightly wider, deeper discussion on a number of the themes associated with real-time payments, particularly with a focus on the US. So first, let me introduce the speakers, and thank you very much for joining us today. We have Keith Gray, who is the Vice President of Strategic Partnerships at the Clearing House. We have George Evers, who is the Senior Vice President on the product side, looking specifically at real-time payments from Vocalink. And from ACI, the Director of Solution Consulting, David Grindal. So thanks for joining us today, gentlemen, and I look forward to quite an interactive, insightful discussion. So let me just simply start by, as I say, asking each of you to set the scene, give us some context and some insights from your perspective. And Keith, can I start with some views from you as you see the topic and the themes emerging from real-time payments with the US focus?
Yeah, thank you very much, and thanks all for joining. I work on the RTP team, the real-time payments team here at the Clearing House. I've been here over 5 years now, so I've been involved with the network launch from the beginning. So it's been both rewarding and interesting to see the growth and the expansion of the network in a relatively short period of time. We at the Clearing House launched the RTP Network, as many of you know, I'm sure. It's been over 2 years ago now. We have, initially our focus, I would say, was twofold. It was getting many of the large sending banks connected to the network, as well as putting everyone else, all the other banks and credit unions in a position to connect through the network via their technology partners. So it was very important to get the right technology relationships in place, companies like ACI that are hosting our call today. At this point in time, we have, I think, between 20 and 25 of banks live on the network. They are typically the larger banks. That makes up over 50% of the US DDA base are receiver and or send enabled. So it's probably a bit over that 50% mark now, as well as about 50% on the send side enabled. As we move between now and the end of the year, we're going to be adding numerous other banks. Many of you may have seen, there's been a lot of activity in the industry press of late with press releases relating to RTP, First Bank of Colorado, Cape Cod, Avidia, Cross River, Berkshire, a number of others, Corporate One, Federal Credit Union. have all announced their launching of RTP by the end of the year. So we're very excited about that. There's much more to come on that. Jack Henry last week or the week before announced that they had 15 financial institutions signed up. I can tell you that they're well over that 15 number now just in the past 2 weeks. So we have a lot of activity around launching RTP. The transaction volume, frankly, is ramping up even quicker than we had expected. Some of the use cases that are driving that transaction volume are account-to-account transfers. It's one of the ones we didn't really think about or expect in the early days, but it's driving a lot of account volume. So think about me being able to move money from my account to my investment account. So my bank account's my main account. I use E-Trade to buy and sell stocks. Whenever I feel like gambling or losing money, I might want to move money from my bank to my E-Trade account. I literally can see it move from one to the other. Literally, I've tested it just to play around with it, where I'm logged into both, and I can see money decrease from the bank account and hit the E-Trade account almost immediately. And the behavior that's creating is it's training the customers to keep that money in their main account to the last possible minute, because they know they have access to it exactly when they need it and can put it where they need it exactly when they want to. There's a lot of business-to-consumer transactions, so think insurance companies paying claims, paying agent commissions, et cetera. Turns out same-day payroll transactions have become a bigger and bigger thing here in the U.S. We're seeing a lot of that being launched on the RTP network, as well as business-to-business transactions as well. Over the next few weeks, you're going to be seeing a number of press releases from larger institutions announcing commercial products and other things, other use cases and things that are happening on the network. So volume is just going to continue to ramp as we both add products on the network as well as add new banks on the network between now and the end of the year. So thank you very much. I'll defer back to our leader.
Okay, thanks very much. Appreciate those points. And there's certainly some interesting stats and initiatives underway, which I want to pick up on when we go back into the main body of the discussion, which we're going to come to shortly. But let's carry on with some background material here. And obviously, Vocalink is at the forefront, George, of developments globally on real-time. So from your perspective, what are some of your initial comments and insights on the topic?
Okay, thank you, Gary. So I guess for me, what's now undeniable is the global shift towards real-time payments. We're now seeing we're involved in projects. We've had real-time payments in the UK for about 11 years now, so it's been in place for quite some time. So we've seen that shift and migration of other payments onto that system as well. But we're now involved in a project in pretty much every region around the world. For either we've been involved in the build and development of a system there, or we're now directly involved in developing a system for one of those countries that's moving towards real time. The key things that key learnings were, in what drives these projects. So very often it's a regulatory change, and what we tend to see, the nature of those projects means that what is implemented is probably in line or in keeping with the regulation, but then doesn't always take the opportunity that goes with what I prefer to call payment modernization. And the reason I call it payment modernization rather than moving to real time is speed is only one characteristic that is really changing within these new payment systems. So we see, a variety of systems. What I'm pleased to see is happening is we see more market-driven changes of modernization programs. So the US, I think, is a prime example where the Clearing House, I think, has decided to move the market and modernize for the market as well. And as such, I think the infrastructure you have in the US is really, functionally rich, and therefore creates a great deal more opportunities than just moving money faster. We have other examples around the world. So in the Nordics, for example, so across 4 countries there, the banks have decided that they want to build a common payments infrastructure, a more modern one that adopts, not only speed and real time, but also the additional payment messages such as request to pay, leveraging the ISO 20022 standards to transport data, but also thinking broadly about, what happens before, during, and after a payment, and how can we improve the ability for banks to help their corporate customers and their consumer customers manage their payment flows using those other messages as well. The difference between those those two drivers of the projects is actually the regulatory-driven ones tend to happen faster because there's a time frame for everyone to get on board with that. So in Thailand, for example, we have a build of a new real-time clearing infrastructure, introduction of request to pay, but also the build out of a very sophisticated proxy service or directory, which is similar to the role that Zelle plays in terms of a mobile phone attached to a bank account. In Thailand, for example, the other proxies introduced were a government ID, mobile phone number, and email address. What's interesting about that is it's allowed the government, typically a very heavy user of payment systems, to transfer money directly to consumers, to their bank account using their national ID, but also use messages like request to pay to request for money to be paid. So combinations of elements of real-time clearing infrastructure with a rich message set and things like a sophisticated proxy can start to build out some really interesting new proposition for market participants. The other thing we're starting to see, as I said, with P27 is primary financial institutions and users of those payment systems starting to recognize the opportunity for moving towards common standards within the messages, but also, across those 4 countries with 4 different currencies, moving towards a common platform across all of those currencies actually makes the burden for banks to integrate into payment systems in all those different countries much lighter because they do it in a consistent way. So that's another interesting trend we're seeing around the world. Key messages, it's not just about real time. Think about the broader message set as you've done in the US and think about what else you can do with those messages. And I think we'll get into those in more detail as we go through.
Thanks, George. Very interesting learnings as you highlight there from different markets driven by a combination of different factors, and particularly highlight the fact that speed is but one characteristic of how we move to a more instant transfer of value in this market, and certainly what's happening under the P27 program, P27 standing for the number of people in the Nordics where they're collapsing 4 schemes into one is another interesting example of it all. And I often think actually does the region that follows the previous one in launching a real-time payment learn from previous ones, or do they take a different angle? And I want to come back when you talk about the rich functionality of the US model, and particularly those proxy or overlay services. So we're going to come back on those points there, George. And so, David, that brings me to you, and you're obviously seeing it from the vendor perspective, the ACI involvement as a major global provider of solutions and services to the banks. So what are some of your thoughts, please?
Hi there, Sid. Thank you. Yeah, we definitely bring a different perspective coming in as the software vendor. I think most people know ACI as a software vendor. We get a unique perspective because we come in on both sides. ACI has strong customer footprints on both the retail card side of a bank as well as the wholesale transaction banking side of the bank. And because of that, as institutions around the globe have kind of approached real-time payments from both those dimensions, we've seen how the two of them come at it separately, from UK faster payments through Australia, Singapore, etc. So that gives us some insight into the integration issues they've had into those legacy payment platforms, how they've had to modernize or approach modernization of those platforms, and I'll probably come back to that topic a little bit later. Don't have a lot to add to what Keith and George have already chipped in with. Obviously, we're seeing add-on functions like request to pay grow, very popular, both in developing and developed economies. Interesting to see other add-on capabilities like pay confirmations also coming up in areas like the UK, largely addressing the first common ask I get from most bankers when we talk about real-time payments is they immediately think of real-time fraud. ACI had some experience with that as well. Some of the early fraud coming in the UK with faster payments that they addressed with fraud tools, but now we're seeing things like authorized push payments, the kind of stuff we saw early with the Zelle adoption. So that's a problem that as an industry we need to solve. That'll be continually lurking in the back of people's minds as we move to real time. The other piece of business worth mentioning that ACI has in the States, in the US only, we're also a significant bill pay provider, and that's given us a different view and approach to real-time payments. We're working really hard with a lot of the players involved, both TCH, some of the other players in the biller ecosystem, some of the card networks. As an industry, we try and figure out how request to pay fits into the whole bill pay ecosystem. I don't think that the industry's come to a solution there yet, but there's one in there somewhere, and we got to figure out what that is. And then quickly, the third area that ACI is playing in right now is we've made a big step into digital overlay services. Made a strategic investment into a large provider in the Indian market, has a huge market share, greater than 50% market share in the UPI payment scheme for providing digital access to third parties. And that really, as George has touched on, is going to be that's going to be the key to explosive growth, I think, in real-time payments globally, and opening up the payment infrastructures to innovators beyond just the core banking ecosystem. As much like there's everywhere, there's three kids in a garage in Silicon Valley who've got a bright idea. As we open up the payment ecosystem, there's going to be people out there with bright ideas that come up with something new and innovative, and they need access to initiate payments to implement those kinds of ideas. It'll be an interesting world when that happens. It's all back to you.
Okay, thank you, David. We're obviously going to touch on those overlay services, are so-called, particularly as we look at the competitive edge that brings in, and also, David, when we talk a little bit more in a short while, be interested to hear from you as to how this modernization of payments, which takes many forms, applies in your world, where you're trying to modernize the way that the infrastructure is now developing to compete in an instant everything world, and then how do you wrestle with some of the legacy and disparate fragmented systems that institutions have. So we'll come back to that point in a short while. So thank you all for those opening remarks. Very good scene setters, and I want to come back to some of those. I would encourage everybody to pump in some questions, raise some points. We've got a few coming through now, which is great. But do please send in some more, and we'll pick up on them as we go through the session. So Keith, can I come back to you as we go into a more sort of wider discussion on some of these points? Interesting stats that you mentioned there about the growth over the last 2 years, the 50% of send and receive, the growth of B2B and so on. Okay. And obviously more to come is the message. But I suppose that there comes a point when banks are moving towards an instant payments infrastructure driven by many reasons, but also expectation of clients now to do things instantly. So how do you see that some of the points that you've raised developing and moving on? And how are the banks in the US sort of approaching real time from the point of view of leveraging it as a commercial opportunity and a commercial competitive advantage? So in a world where everything moves to instant payments, how do you make a difference in all of that? Keith, your thoughts on that?
Yeah, so thank you, Gary. One of the things that, and George hit on this briefly, is whenever we launched this, and we named it RTP for real-time payments, so the focus very much was on the real-time nature of the payment. But absolutely what we're seeing as banks and credit unions are beginning to launch products, some of the core underlying functionality that sits on the RTP network, that the RTP network enables, I should say, things like complete visibility of the transaction on both sides of the equation, payment certainty, knowing it's done within seconds, both on the send side and the receive side, with both sides of the transaction having complete visibility on it. I think David mentioned the request for payment capability, which allows me to send you a request for payment that includes all of the data associated with that request, as well as where I want you to put it, as an example. Really allows that, coupled with the fact that it's not only the payment, but the data and the information associated with it, coupled with all of that, allows banks to offer, banks and credit unions to offer, and their partners, like ACI, I should say, because most banks are leaning on their technology providers for this type of application development and innovation. It really allows a whole new creative level of product innovation and product capabilities. So again, we provide the infrastructure that's available to all, and what we're seeing already is the industry really stepping up to fill that. Now, some of the things we're doing to help kind of seed that is things like a bill pay pilot that we're driving this coming year, that it has 10 or 12 banks involved, and a number of billers, companies like ACI are involved, really to reinvent the way bill payment works based around that real-time payment, or I'm sorry, not only the real-time payment, but the request for payment and that data capability as well. So there's things like that. We have an innovation site on our website now where we're keeping people up to date on what's kind of what we're up to in that area, as well as trying to drive trying to drive activity and ideation, I should say, across the industry. We're not delivering the products, but we're doing what we can to help facilitate it. One of the things that we've done and I think we launched this at least 2 years ago, we have a corporate advisory group where we pulled together large companies, small companies, everybody from Delta to Uber, to small businesses on the corner. And frankly, the overriding theme of those discussions was, when we said, okay, would you use this, or what type of things would you use? It was, what's taking you so long? And frankly, we're seeing companies like Google and Apple and PayPal and a host of other, these non-financial type providers, fintechs, really stepping up to meet customer demand. So what the whole thing about RTP was to provide a platform that allows our financial industry to compete on a level playing field with those kind of guys, with that type of competition that's coming along now.
So Keith, a question that springs to mind, and I'm sure our colleagues will have some as well, is given the implementation and rollout of real-time, are the banks really seeing this as fundamental to their modernization of themselves when it comes to moving into a more digital economy? Is it the digital economy strategy that's driving everything, and then they're welcoming real-time, or is it real-time that's coming in and it's causing them to think differently about how they offer other sort of services? Kind of what comes first question, really, from me, Keith.
Yeah, and I would say and I'll answer it this way. So one of the things that RTP allows is getting to capabilities that you would associate with the gig economy or the way people want to do business now, without having to turn your whole bank upside down, without having to replace your core system, by leveraging your existing underneath infrastructure. Because RTP has a lot of those capabilities we've mentioned kind of built on top of it. So a lot of times banks are thinking, geez, do we have to throw everything out to do this? Well, the answer is no. And there's a host of companies now in our space that are providing really creative, innovative products that a bank can easily leverage in a cloud-based type of an environment. So to answer part of your question is, I would say that it's not a huge infrastructure lift, especially on the receive side. Now, once you get into the send side of the equation and you really start getting creative about what products and services I can offer, Then you get into the, you're developing products and dealing with customer experiences and how you support those. So that's why phase one oftentimes is we want to be able to connect to the network and receive these transactions that are flying over the network. And we're at a volume now where any bank, if they, quote, turned on RTP now, they would almost immediately start receiving transactions. There's enough volume there across the network where it kind of touches everybody. And then kind of figure out what their product strategy is moving forward. Most of those banks that are on the network now have gone past that and are developing that product strategy. A lot of it's around corporate banking, commercial banking, small business banking, and opportunities where you can really drive fees from those type of things. So.
Right. Thanks.
Yeah.
Thanks, Keith. Very insightful. Any comments from you, George or David?
Yeah, just a few points to kind of, if I can build on what Keith's saying and to come back to the question you asked, Gary. So I think there are some aspects of the real-time infrastructure that are in a catch-up mode. So there aren't many areas in my life where I, have a cut-off or something that isn't available at the weekend or not something that I can access as well, through primarily my smartphone as well. So in some respects, the real-time nature of the payment movement alongside the availability of it, so it's 24/7, it's always available. They're catch-up elements. I think the leapfrog elements of what you have coming to the US is probably the more interesting area and the opportunity, which is the way I think around it is there are things that happen before, during, and after a payment. In many respects, the existing payment infrastructures are there really just, they started off as, shared utilities. Often that's the history of them between banks for them to more efficiently move money between themselves when their customers wanted to. Over time, they've been directly exposed to customers through internet banking and now mobile banking as well. And now the opportunity is to upgrade them even further. So I think the use cases for the banks to focus on, especially in the US, and again, I think what's different about the US to other markets is that you have this rich message set sitting within the core infrastructure. So you have, if memory serves, the payment, you have request to pay, you have something that sounds fairly mundane, but which actually very powerful, request for information. Those messages, plus the ability to transport, data with those messages, what creates really powerful new propositions for banks. So, I'll give an example. So, a small business having the ability to generate a set of request to pays to all of its customers or customers that it wants to be paid, in essence, sending through an electronic bill to all of their customers through that bank payment system. Doesn't mean they were not going to send invoices or not send emails for them, but what they have here within this network is assured delivery. It's a highly secure, highly resilient network, and also they know that in terms of the destination that it's going to, whether that's identified through a proxy or direct to the bank, it's going to pop up in the internet banking or mobile banking app of their customers. So therefore, that's in the place where they make decisions around where they're going to pay. It's in the place where they can see what their balance is. And if they make a decision to respond to a request to pay message and say, okay, I'm going to pay this bill or pay this invoice, and they send the money back, then reconciling that payment against the request to pay becomes much simpler for them. The excitement for people who work in receivables management around something like request for information is that getting information or talking about payments is an area of quite high risk, especially for businesses, because you have to identify who you're talking to. You have to be certain that it actually is your supplier or your customer and have identified them before you make a decision on, paying or providing a discount, etc. And the fact that that message is transferred through that highly secure network, which your banks or financial institutions sit in front of, that removes a lot of those elements of risk. So that's, I think, is kind of the upside and the opportunity around new products and services. Another factor there is actually banks today, they don't see a lot of that, that information before, during, and after a payment. A bank account in many respects is a record of something that has happened. The money came in, some money left. It's an event that happened. having insight as to into the interactions that happen before that is really helpful for other products and services. So, that small business that's sending out lots of requests to pay is like, gee, he seems to be growing really fast. Do we have a working capital opportunity with them? Do we have better insight as to our businesses that are growing? That business that's receiving lots of requests for payment seems to be building up a lot of liabilities around the place, and they don't seem to be sending out as many. So really useful insights for other products and services for the banks as well. So actually access to a data set they don't currently see today. I just wanted to pick up on one of the points around fraud and in terms of real-time fraud, because we're 11 years in now within faster payments, and one of the areas that Vocalink focused on in the UK and we're focusing on now in all of the other markets we're looking at is leveraging our technology and our data scientists and our ability to work across very large data sets to start to help manage fraud. But in many respects, we saw, within the UK, that movement of money, it can go much faster through the system, but equally having a system in place that can watch that money moving across does present an opportunity to solve what actually is an underlying problem around fraud, which is account takeover. So a fraudster has to have an account that they can move the money to. You now have a system which is moving money in real time, which means that we have the ability to watch money as it's maybe taken from one account and moved through that payment network, so moved from bank to bank. And we did a lot of work with all of the banks here in the UK to analyze the movement of money across the network. And actually what that highlighted is it allowed us to, in some respects, light up those money mule networks. Often they're there, they already will be there, and they're often there because organized crime looks at building out those networks. So with a combination of the real-time infrastructure and the data scientists and the analytics that we're able to do, we're able to light up those networks. And that means we can start to identify wholesale. This is where we have a mule network. Do we see patterns within that suggest there may be one or two or three organizations involved in building those networks? But you can start to address the root cause of that, which may be account opening processes across the community, etc. So in some respects, yes, there is the movement of money is in real time, so things happen faster. But in other respects, I think it creates a very strong trail for us to follow and to start to get at the root cause of this fraud. So opportunities do emerge to deal with other aspects of fraud as real-time payment systems are developed.
So George, thanks for that. And it's an interesting point that you raised that often is overlooked, in that the way in which the transaction in its entirety is managed across the ecosystem, as it were. We have also developed sophisticated tools that can start to track the fraudulent activity that some jump on because it's new and it's fast and it's instant. And that often doesn't get the airtime that it really merits. The acknowledgement that as the money moves at a particular pace, so does the whole infrastructure have to grow, and there are things that we can learn from what we're creating as value in terms of how we manage it as well. The point I'd like to come back to is you obviously said up front, and we're kind of moving on to another question really here, talking about the overlay services and how you built this up. So we're basically talking about effectively a digitally driven overlay service and a complex and evolving ecosystem. So two things. One, you've obviously referenced the richness of the functionality in the US model. Just out of interest to me, do you have views on what drove that, how it became so rich, what was the focus there? And then how do you see an ecosystem spinning on the back of that, given that to really take advantage of the richness in the core, you've got to maximize it probably with third parties and other initiatives and innovation that it's driven by the fintechs, really. George?
So when I started, I talked about the driver for the change and regulatory versus market. So because I think the Clearinghouse project was a market-driven one, they have been very thoughtful about what they want to achieve with that program. So overlays is often a model that's referenced in other parts of the world, and typically it becomes a model that's referenced because the real-time clearing infrastructure isn't functionally rich and doesn't have lots of messages. So well, we've got this new network and we need to build overlay services on top of that. That model has been talked about for quite a while. I have to say I haven't seen it around the world succeed yet. In fact, I have some evidence. So in Australia, who introduced a real-time clearing system a couple of years back, they haven't been successful in building out that ecosystem of overlay for riders. And I think part of the reason for that, and part of the reason why you will have more success in the US, is because if you build an overlay service, something like a request to pay, and that message is not embedded within that core infrastructure, then actually what you've got to do is build another network for that, and then you've got to get that network to connect into the real-time payment system. If you have the message set within the network, i.e. within that core clearing infrastructure, then the ability to innovate and build propositions using that much richer message set is available to all the participants that are connected into that. So you can be very active in that and build lots of billing or request to pay propositions for your customers. And as long as the other participants can receive those and then send back a credit transfer, then you can be successful in rolling that out. So the key difference between this overlay model is you need to build another network. You need to be successful in driving that innovation. Whereas if you have this message set within the core network that most financial institutions are connected to and bank accounts are connected to, then yes, you can drive innovations, and that might be via fintechs or third parties or the banks themselves directly. But you can build a lot more and be confident that actually those innovations will reach all the customers and the participants who are already connected to that network. So I think that's the distinction between we have our debates internally are what we call the kind of the fat switch or the skinny switch. Skinny switches with minimal functionality but just move the money in real time, for example, tend to be driven by regulators. When the market participants are thinking about what they can do with that network, then you have fatter switches, i.e. more functionally rich switches, and I think that will drive faster take-up of new innovations such as the ones I talked about earlier.
Thanks, George. And David, could I draw you in here as well? Because clearly you touched on an ecosystem, and the core systems will be the connection into real-time global schemes, particularly in the US, and there's richness there, but you see others third parties developing on that. So any thoughts on what George has introduced, and any thoughts also on the fraudulent aspect of this, because clearly that's an area that is going to be of great interest and awareness to you.
Sure. Actually, and I think I will put out George from now on and talk about fat switches versus thin switches. I absolutely think the fat switch is the right model to go. Having that rich payment functionality, or actually both payment and non-payment functionality in that core infrastructure is a key building block to ultimate success for the ecosystem. You can't rely on the surrounding ecosystem players to be able to integrate, agree on standards, all the business problems that need to be solved. So yes, absolutely, having the core central infrastructure provide everything from request to payments, pay confirmation is one I touched on earlier, potentially centralized fraud detection services, because the core central infrastructure will see more transactions than any one participant. That fat switch, rich switch, absolutely is, I think, a key element. I still, as I touched on earlier, and you just mentioned this, Gary, I think the third-party access is another one. The banks will continue to innovate, as Keith mentioned in his discussion a few minutes ago. Once they begin to build their origination infrastructure, build out their corporate channels, they'll start creating products with interesting pieces. But I think the innovation, that circle of innovation, needs to go farther and let people, whether it's the large fintechs, the Googles and Facebooks of the world, or some startups obviously with proper security and access rights, come in and start creating their own services. That might be more of a consumer play than a corporate play, but I think you'll see a lot of creativity there. The other area of interesting creativity using that core functionality is going to be the data. We haven't talked much about the data yet. There are a lot of participants in this ecosystem that talk about richer payments, talk about the data being just as important as the speed. And I think that's going to be an interesting innovation to see which player can handle and present that data to their corporates most effectively, whether you do it as a service or housing. Like the savings to large and medium-sized corporates around the richer 2022 data provision is very interesting, and the provider, the bank, the fintech that manages to do that right. Maybe it's for the mid-sized corporates because the large ones will figure it out with their ERP systems. That's going to be a very interesting part of expanding the use of the system.
So thank you for that, and I want to stick with you there, David, because I want to come on to a couple more points. But firstly, I'd just like to acknowledge the questions that are flying in here. We've had questions around the fraud aspects. We've had questions around the standards. We've had questions around the third-party connectivity to the infrastructure as it's emerging. So please keep those questions coming in, and we are covering them off as we go through. What I'd like to do, David, is move the conversation on a little bit more, because we've talked about where this ecosystem from an architectural point of view is going, but let's take stock of where we are maybe. You know, we've still got, and you'll experience this more than most, a number of institutions of significant size, still overcoming the challenges and the reality of fragmented, siloed legacy systems, and obviously they've got to put a lot of investment into that to maintain them, and at the same time put investment in to grow them and grow an infrastructure that may be connected to in part, but different from the legacy. So in terms of these modernization of systems as opposed to payments, how do you see the banks are responding to this? And are they doing it well, or is there a lot more work to be done?
An excellent question, Gary. I think, as in all things, there's definitely a bell curve in how we're seeing institutions react. So at one end of the curve, some institutions, whether it be resources or priorities, have taken a very simple approach, sometimes a very silo-focused approach, no thought of future growth and architecture. Those banks have either outsourced to a provider or dropped in place very simple gateways. So they may put a gateway to receive RTP transactions inbound and very little more. Those institutions will have to revisit that in a couple of years as their competition drives by them in the services they provide to their corporates. Up at the top end, then you've got banks that have taken a much more thoughtful approach. Payment hubs have made a comeback after a couple of years of kind of being in hiatus, even if it's only payment hubs just for immediate payments. So we're seeing banks take a broader multi-channel approach to bring in initiation from more than just one channel, thinking about mobile, web, a branch even, thinking about a hub that connects to multiple schemes. So reusing key sets of logic for TCH RTP as well as Zelle and some of the other competitive schemes out there, from the card networks, even the Venmos of the world, and orchestrating all those transactions reusing core pieces of logic. So we are seeing a small to moderate number of institutions taking that payment hub approach, fundamentally changing their architectures. And that preserves some of their investment inbound. So if you've got a good front-end hub that takes care of all your immediate payments, you can insulate core DDAs and fraud systems. Although obviously they need to be aware, but you can insulate them from major change. And then some of the very forward-thinking institutions are reaching out to the API world. I think we're still in an experimental stage there. Some of the larger players have opened up private sandboxes for fintechs, not specific to RTP specifically, but kind of dipping a toe in that API water. We don't have the industry standards yet before a full integration of an API approach ecosystem to things like RTP initiation, but we're going to get there, and I think that's going to be a very interesting piece. The biggest ones are already trying that. Sorry, I'll stop there. Go back to you, Gary.
Okay, no, that's really interesting, because the strategies get confused sometimes in terms of how banks, understandably, and it's not a criticism, are managing multiple change across the regions in which they operate. But the interesting point you pick up on, and Keith, I'd like to draw you back into the conversation now. We've been living with multiple endpoints and infrastructures for years, and Payment Hub was a solution to that. And as you say, that David, payment hubs may be coming back. But one of the things that just brings a smile to my face is here we are with a functionally rich core RT solution in the US. As George points out, richer than most, lots of enriched functionality within that. And as Keith, you pointed out, a strong focus on more connectivity to the banks in the US. And here we are with the Fed making a big announcement about the launch of its own real-time gross settlement system in 2024. Keith, you're in the spotlight here, if I may. Having developed such an enriched RT solution in the US, how's the impact of the Fed's announcement, and what's the market reaction to the Fed's announcement from your perspective?
Well, I did seem to hear something about that regarding the Fed, so I can probably address that. Yeah, so it is interesting, and obviously, you have, there's I would say a strategic or a political position of this and a very tactical position of this, right? On one hand, you've got, 5 years ago, the Fed convened the Faster Payments Council. I'm sure some of those on the phone were involved in that, where they went to the industry to define, okay, what should a real-time payments network here in the U.S. be? And they challenged the private sector to step up and deliver that. So frankly, we did. And one of the advantages, and we've talked a lot about the enhanced functionality that RTP has over some of the other payment schemes around the world. Well, one of the reasons we were able to do that, frankly, is we were a little late. So we were able to learn from what our friends in the UK and some of the other places around the world did and build upon that to end up where we've ended up now. So if we were late 2 years ago, and then the Fed now with their RTGS system is, at best 3 years from now. And frankly, we're just seeing after launching this 2 years ago, a lot of the work and the effort is not getting to launch, but, getting banks and credit unions on the network, getting all of the core systems involved and all of the technology partners like our friends at ACI, Vocalink, et cetera, up to speed. That's taken us 2 years to get to that point now. And so if the Fed's not going to launch for 3+ years and then they start there to get to where we are 3 or 4 years later, assuming they can do that, and the private sectors are able to do, is a whole different discussion. But the point is, the what we have seen, the impact of it is frankly just a barrage of incoming banks saying, hey, we need to move forward with this now, and we're not going to wait 3 to 4 years to do it. And I think, we always had a lot of interest in onboarding onto RTP, but then as soon as the Fed announced what they announced, then it's almost like the dam broke, and now all of a sudden there's just a host of banks that are moving forward with the network because they realize, 3 years from now will be well too late. I understand the reason that the Fed thinks they need to do it. I do think, and I'll speak for me personally, as opposed to TCH now, I do think the Fed needs to be involved. I'm not sure being an operator right now is the right solution, but there's got to be a way we can work through this where it's a good solution for the industry and not just a something that's going to add a lot of cost, because you talk a lot about interoperability. We run an ACH network, they run an ACH network, and we send files back and forth, and you don't know the difference as far as being the customer, but we're not sure that interoperability can be achieved in real time. So we'll
Keith. Thank you for that. Yep. That's an interesting point. It still seems to be a duplication. And George, I've got a question for you on that in a moment. But there is a slide up now, because as we come towards the end of this presentation, we've heard a lot of detail around what's emerging in the US, around real-time as an instant payment scheme, but the associated infrastructure considerations. And if you would like to have more discussion and be contacted by ACI, there is an opportunity for you to register that on the slide you have in front of you. And as we come to the end of this session, George, just a point on the question I asked Keith there. It just all seems to me that you've added more choice with no great real benefit to what's happening. And given how you've seen infrastructures develop around the globe, does the US need another one now, do you think?
Well, I think one of the things that actually it's prompted me to highlight another, I think, good characteristic about the system being put in place. So where within the UK we have the real-time clearing infrastructure, faster payments, and then that settles through separate infrastructure with the RTGS system here in the UK. And what we have seen instances of is the central bank or the RTGS infrastructure for interbank settlement thinking or proposing that it upgrades in terms of availability, etc., in line with the real-time clearing infrastructure. That separate settlement process is really only necessary in slower-moving systems where you have payment files exchanged between banks and them having to settle them. What another opportunity that the clearinghouse took in the US is they said, well, actually, rather than having that separate settlement process, why don't we have the system itself be the system of record? The money that participants have is in their own Fed account, so therefore it's, in inverted commas, real money, and therefore that system is a system of record, and all the payments that flow through it are, in essence, they're clearing and settling at the same time. So you don't need to dip out to another settlement infrastructure from that infrastructure as well. So that was, again, a good piece of design that took out the need for those two separate processes. I think the points made previously were correct in terms of interoperability across multiple real-time infrastructures. That's a bit harder to orchestrate than it is for batch files, where you've got time to move the files around. It's more complex. And actually, the effort for people to participate remains the same. So the work the banks need to do to interact with whether it's a Fed real-time payment system or the clearinghouse one, it will be the same. It won't be any easier because you've got to do it with the Fed. So I think you're right. There's a risk that creates additional infrastructures that people need to connect to. Interoperability is not straightforward. And actually the work and the opportunities that arise from having that system in place remains the same. So our view is having one is great. Having ubiquity and reach is really important. Adding another one doesn't necessarily create that ubiquity or improve reach. Thinking about how you help smaller organizations to connect into the clearinghouse infrastructure, I think strikes me as being an opportunity. So, how you do things, and in the market, the role that Jack Henry plays in terms of being a tech provider and a platform provider for its banks and participants is a good example of an organization stepping up, doing the work in advance of connecting into the real-time infrastructure and being able to be the technology partner for those smaller banks, and then allowing them to participate without the technology upgrade. A model like that, I think, is really valuable, and we have models like that in the US as well. Potentially that's a role or a role for the Fed to play as well. So I think it's unclear what benefits it will really bring in terms of take up of real-time payments in the US to me.
George, very clear. Thank you very much for that. And we're coming into the last 5 minutes. David, you may well have a comment on that, but also you may have one or two final remarks you want to make as well. So David, the floor is yours.
Thank you. I'll come in with both. So it's interesting. We we use phrases like another, you have to remember that the U.S. already has a wide range of, if not immediate, at least person-to-person payment networks. So we've got probably the most solid and richest full function in RTP. You still have, the granddaddy of PayPal. You've got Visa Direct, MasterCard Send, Venmo. Let's not forget Zelle with its meteoric growth. So it is one more of a long list. So I think Keith actually hit it right on the head. There's definitely a role for some kind of an overseer or regulator. So whether the Fed needed to step in and operate as an operator is an excellent question. There is the Faster Payments Council, kind of the follow-on to the Faster Payments Task Force, which has some oversight abilities but has no regulatory authority. So there might be a role in there somewhere for a federal organization. It's a very difficult, thorny question, and Keith used the word politics. There's some politics in there too. It does. If I can go back to our role as a software vendor, this is why institutions need to think of a more profound architectural approach to their immediate payments processing, because they're working in this environment of multiple networks. And the participants that built single net scheme immediate payment rails will find themselves having to build out 5 or 8 or 10 of them, as opposed to taking a broader approach. So now that I did bring it back to ACI at the end, as our host, the host would like to thank all of our participants, Keith, George, Gary, for moderating. I think this is an excellent discussion. We got up some very good topics. We could discuss this topic for 8 hours, let alone 1, and still not probably come to conclusion. As you see up on the screen, there is a contact button or link if you would like anyone from ACI to contact you, discuss these issues any further. And Gary, I don't know if you want to go back to try any of the questions that have come in.
Well, we're coming to the end now. What I can say is that we have touched on many of those points, particularly around standards, fraud, connectivity, and so on. So I hope that we've given the people that raised those points some additional insights and thoughts to take into consideration as they look at their own strategies and the organizations they represent and the roles they have. What I would like to do, picking up on David's point, is to add my thanks to Keith, your contribution, George, yours too, and of course yours, David, and to everybody that registered and joined us, and for the questions you raised. I do hope you took the opportunity to download those papers, and clearly we will look forward to engagement with you and ACI as we go forward. It's a subject that we're still learning about, even though we've got some experience globally about rolling them out. As was said at the beginning, there's different drivers for these schemes, and there's different intended and unintended consequences, but it's all part of a major transformation of transaction services, one that will continue and that one has to continue in order to be competitive and to compete as institutions in the markets in which we operate. So I'd just like to add my thanks again and wish you all a good afternoon, and I'm going to sign off the webinar now. Thank you very much for joining us, and enjoy the rest of your evening.